Hi guys, it's Clark. These are the 3 accounting mistakes that can bankrupt your business. Want to avoid that? Then keep watching. Number 1. Not obtaining an accountant. Operating business without an accountant is a risk that you should never take. Many restaurant owners attempt to manage their finances by themselves, a big mistake that will cost you money, time, and frustration. Accountants can optimize your tax strategies, enhance your financial management, and provide growth advice. To put it simply, to help you save money and help you grow. Not retaining an accountant might save you a few $100s here and there, but consider the time investment required to learn how to do bookkeeping and tax preparation. Does it have a good ROI? I don't think so. Ultimately, this will lead to poor bookkeeping practices, tax filing, compliance issues. What will happen is you will end up retaining an accountant anyways, but having wasted time and being 2 or 3 times more costly than if you had started from the beginning. Action items. Book a consultation with an accountant. Learn what is expected in terms of responsibility from both sides and start transferring your books over to the accountant. 2. Neglecting tax obligations. Ignoring sales, payroll, and income tax responsibilities often result in fines, penalties, and legal issues. It's crucial to remember that the sale and payroll taxes collected aren't yours to keep. They're held in your possession temporarily for the government until tax remittance is due. A common mistake among business owners is that they don't realize the importance of keeping these funds separate both on paper and physically. And because many of the business owners don't have an accountant to keep track of these tax payables and they don't keep these funds separate from the regular operating accounts, they use up the tax money and leave nothing for the government at the end of the fiscal year. This will lead to a cash flow problem and eventually lead to business closure or bankruptcy. If you're watching this, it's not too late to rectify this problem. My golden rule is set aside a quarter of your monthly growth revenue in a separate bank account only for the taxes. This ensures that you don't accidentally spend the tax money and allows you to focus on running your business, secure in knowing that your tax payments are accounted for. At year end, after fulfilling your tax obligations, any surplus can be transferred back to your main account, ready to start fresh. If you do this, I guarantee that you will never stress about your tax obligations ever again. Action items. Open a separate bank account. Designate this account for tax withholding and payments and do not use it for anything else. Transfer 25% of your gross revenue into this account at the end of each month. Number 3. Relying solely on your accountant. While accountants are invaluable for bookkeeping, budgeting, tax planning, and ensuring tax compliance, they're not you, and you cannot expect them to have the same level of ownership for the business as you do. Most small businesses don't have a dedicated in-house accountant, meaning that your accountant has to juggle between 50 to more than 100 other clients at the same time. You are just another client to them. A good accountant will fulfill their scope of work to compile and organize financial data, and it's your job to understand this information to gauge your business's financial health and identify the areas of improvement. A common pitfall includes business owners neglecting to learn the basics of accounting, either due to the time constraint or simply avoiding the harsh financial realities that these data bring. Understanding the financial statements is crucial to identifying and addressing issues before they escalate, and it's the only way to responsibly operate and grow your business. Successful restaurant owners appreciate the role of accountants in assisting maintaining the financial health and growth of their businesses, allowing them to focus their efforts on managing their businesses effectively. Action items. Self-assessment of your accounting responsibilities. Do you know how to read the financial statement? Do you know the complete list of documents that your accountant requires for bookkeeping and tax return? Do you know your tax filing schedule, such as when to file your sales tax return, your payroll remittance, and your corporation income tax return? I hope that you find this video to be informative. Please remember to like, subscribe, and turn on the bell notification so that's not to miss out on more practical videos like this one. Thanks for watching. Clark out.